that was scheduled today to consider its Q2 earnings. So that means that Exide Industries earnings will be postponed because the board meeting will not happen today. Although the good news is that there is no material impact on operations due to search by these IT officials. So nothing constructive could have been has been found with regards to where the IT search has happened. The stock is kind of trading around 0.7% lower. Not much of a move there, but it is kind of moving back to the positive territory from, of course, its day's low point. So that's with regards to where Exide Industries is concerned. Now, seeing a tad bit of cooling down as well. But Kush, quickly, your view on the charts for Exide Industries? Would you be a trader here?
Hi, Mahima. No, I would not, because we've seen the stock attempt, a jump multiple times and face negation from that 400 odd levels. The averages have also seen a death cross. So I would wait and watch. The only silver linings, 375, 370, that's been the medium-term support zone for the stock. And right now it's struggling to hold around that 200-day moving average. So maybe it could just go sideways. So the bias could remain sideways to negative. And hence, when the markets are trending and the stock's not your best, staying away from a stock, which is in such a pattern. So Exide right now is an avoid for me.
Okay. And what about your picks for the day, Kush?
Sure. Going with a mix of a long and a short. Been constructive on Realty for, the last week, 10 days. So Oberoi Realty also is one of the stock that gets added to the list, stands out, has had a good move, golden crossover of the 20 and the 50-day moving average, volumes picking up on the upside. And the stock performing in the negative market is a very clear indication of relative strength. So 1770 and 1805 are your targets on the upside. 1720 is where you place that stop loss. So one more addition to the Realty pack. The other one, and it may not be music to your ears, is a short sell on the Hindustan Unilever. We've seen the stock fall off the cliff after that result announcement and has been facing those supply pressures, at higher levels. So yes, from a near-term perspective, you could still go short on Hindustan Unilever for targets of 2430 and 2400, stop loss at 2495.
That's pretty interesting. Sell call coming in for HUL. Just mentioning AB Capital before we go to Varsha. The numbers are largely decent, but a net profit that has come down. This stock was in news also. There was a block and it was absorbed properly with the DIs as well. But on to our bull versus bear segment.
It's stock of the day segment.
Oh, okay. Sorry, there's an error. On to our stock of the day segment, and the stock in focus is Dr. Reddy's. And Varsha is going to give us all the details as why there has been such a big crack in Dr. Reddy's.
Well, thank you so much for that. The Canada regulator has returned company semaglutide, that is your anti-obesity drug. So they've returned the application for the company citing deficiencies. Now they're saying that this is a notice for non-compliance and ask for more data and clarification. Company is expected to respond soon, but no timelines have been shared. Now the analyst, overall, if you see, they're expecting this a temporary setback and approvals are likely expected before March 2026. Now let's talk about the opportunity. What kind of opportunities this semaglutide has for Dr. Reddy. So one is the Canada market, if you see, opens to generics in Jan 26, and Dr. Reddy's is likely among the first or the early entrants once approval comes through. Now also FY27 forecast, now this is an average forecast that analysts are expecting, includes $100 million for this product from FY27, and the company is among first movers in semaglutide. Semaglutide is nothing but an API for anti-obesity. So companies first movers in this product for India, Turkey and Brazil. Now let's see what brokerages are saying. So overall, if you see, they are expecting this as a very temporary setback, and they're expecting company to have this approval before 2026. Now what BofA is telling, so they expect some SEMA opportunity down in Canada, but not out, and they're expecting almost 160, rather SEMA approval pushed out, but still a FY27 opportunity according to BofA, and they're expecting almost $160 million contribution in FY27. That is 15% of FY27 EBITDA. This single molecule will contribute almost 15% to the overall EBITDA. Now let's see what Jefferies is saying. Semaglutide being a key contributor contributor to North America's revenue for FY27, and timely approval essential, rising competition is at risk according to Jefferies. Let's see what Elara Capital is saying. So Elara sees the setback as temporary, and the estimates according to Elara remains unchanged, and they expect the company to remain among the first few global players when it comes to semaglutide market. So overall, what is the conclusion, when it comes to the semaglutide market for Dr. Reddy's is this is a temporary setback, though FY26 for FY27 all the analysts are expecting this product to contribute almost 15 to 17% of EBITDA in overall EBITDA for Dr. Reddy's. So this is just a temporary setback, and though Dr. Reddy's is planning for the approval for semaglutide in near term.
All right, thank you very much, Varsha, getting us all the details for Dr. Reddy's. Kush, I just have a question. Bhav 1200 ka hai. Is it a good buy the dip strategy? Stock is down 4% and it's a temporary setback. What would your view be on this?
Well, if that's the only stock that you want to consider in the pharma space, then yes. The reason I say that is because अगर recent rally देखें which happened in April, वहां से अगर हम एक retracement draw करें तो 1160 का जो level है वहां पे 61.8% retracement support आता है, and the stock has rebounded multiple times from 1180. So यहाँ से risk reward ratio तो बहुत ही effective है. तो अगर कोई एक aggressive trader हो और एक buy opportunity चाहे in Dr. Reddy's, I think this could be a good opportunity. 40 rupees का stop loss लगाइए. I think on the upside you've got about 80 to 100 rupees upside which the stock could very well see. So for an aggressive trader with an 1160 stop loss, I don't think it's a bad idea. But as I said, for an aggressive trader only, and a stop loss of 1160 is a must.
So you said if DR is the only counter that you're looking at in the pharma space, what other counters are you looking at then?
Yeah, I had a feeling either you or Sharad would pick this up. No, so two stocks on my radar. First is Laurus Labs. I know how valuations on this one are stretched, but from a technical standpoint, it's still attractive. It's got some momentum going for it. It's had a brief round of consolidation and then back to its winning ways. So I think from a near-term perspective, 980, 995 are good targets. You could place your stop losses around the 945 mark. So yes, there is still some strength in Laurus Labs. I think one other stock, which was just in the news, and I don't recommend this, but I have this on my radar, which is Cipla. Now, the management change seems like a big one, but what you're seeing is that the stock's already rebounded from those intraday dips or the intraday low of 1500. So I'll keep this on my radar. Maybe this dip could well be an opportunity. So I'd perhaps give it a day and look at Cipla as well more constructively, but Laurus Labs constructive from here as well.
So Laurus and Cipla are the two counters that Kush has on his radar. In fact, viewers, we're also going to do a profit intelligence piece on the Nifty Pharma and as to what is causing the pain in the entire sector. So do stay tuned to watch that. But moving on, as investing platform Groww becomes a household name and gears up for their mega IPO, NDTV Profit's managing editor Tamanna Inamdar sits down with the founders in this exclusive interview ahead of their highly anticipated listing. Coming straight from the Flipkart's playbook, they share their journey of democratizing investing for millions. Get ready to hear why their customer-first focus and search for perfect product market fits and why this sets them apart in this highly competitive space. Listen in to that conversation, and of course, for the full interview, you can stay tuned on at today at 6 p.m. as well as 9 p.m.
Let's just start with the origin story. 2016 is when both of you got together and did Groww, but you've worked together before. At that point, met each other at Flipkart. Where did the whole idea come from?
Yeah, so we know each other since like 2005, right? Our first jobs together. And then at Flipkart, when he joined, so I joined earlier, and then after a year he joined. We started brainstorming. By the way, we have two other crazy folks with us who are not here right now, but they got added to the team later. But when we started, the idea was four of us. We worked at Flipkart and we saw how e-commerce kind of disrupted overall commerce in the country, right? and passionate. Like we were very passionate about financial services, especially investing. I started investing when I was studying here at Bombay, at IIT Bombay, and I started around 2001 or something. And I still kind of remember like how tough it was to open an account and start investing. And guess what? In 2016, it was similar. And when 4 of us started brainstorming, we thought, can we democratize this process of investing? Can we build like a platform, like how Amazon or Flipkart happened in e-commerce? Can we do something similar in investing space and wealth? Can people come? Can we make it very simple, delightful, transparent, and let people build their wealth?
No, so just hang on a minute. This is interesting. So you've taken the experience of selling phone, laptop, clothes, etc., XYZ, everything on Flipkart, and said, let me apply to financial instruments.
So I think a little differently, Tamanna. I think we've taken all the learnings of how consumer think, how consumer decide, what is important for the consumer, and use that learning into a different place, solving a different problem. So investing was a different problem. Buying a phone or a t-shirt or a shoes is a different problem. But humans are the same. So the thing that helped us and translated from our experiences of not just Flipkart, even before that, we have been part of a couple of startups. We did our own startups before.
Together or separately?
Separately.
Okay.
Both of us failed, not in
different ways.
In different ways.
Yeah, and that was also helpful, by the way, because now you are not from the financial industry. You are not from that. So you can think like a customer. So there's something called curse of knowledge, right? If you know everything about that, then you can't think about somebody who does not know anything. So when we think about Groww, we think it more like a consumer problem than like a financial problem. Of course, there are financial products, but you need to know how customer is thinking about that product.
All right, viewers, just a quick correction. The full conversation will air tomorrow at 6 p.m. as well as 9 p.m. So do stay tuned, and of course tune in to watch the entire Disruptors show and hear as to what founders of Groww have to say about their company just ahead of the IPO as well. So that's with regards to where Groww stands. But with that, we have Neerav Ashar, Head of Equity Research Analyst at Latin Manharal and Securities, joining us as well. Neerav, hi, a very good afternoon to you. Thank you so much for taking out the time. I'll take up the first question with regards to the pharma space. We talked about where technicals stand, but lots happening otherwise as well. We talked about Dr. Reddy's and the regulatory concerns that are, kind of an overhang on the counter. There's Cipla also that's come out with its earnings. What's the view like on both of these counters, and anything other that you like in this space?
Good afternoon, and thank you for the invite. I think the pharma space has been going through a lot of challenges and headwinds in the recent past. We've seen a lot of players, frontline players, face challenges, especially in the overseas markets, especially in the developed markets. And this could be on account of the regulatory issues, US FDA related issues, or the concerned regulatory agencies. Plus, we have the pricing pressure also as far as the generics are concerned. There is a need for investments on specialty drugs, and a lot of money needs to be pumped into R&D processes and specialty drugs. And introducing new products in the developed markets is a tough task at this point of time. So I think the business models are being reworked at this point of time. There are companies who are focusing on contract research and manufacturing, CDMO space, what we call it as. Then there are companies which are doing advanced research work. Companies like DV's Labs or Laurus Labs, which are working extensively in these areas. But the broad view is that the frontline companies have been facing a lot of challenges. Today, we've seen the numbers of Dr. Reddy's laboratories as well as Cipla. I think in the case of Dr. Reddy's, they have received certain notices from the Canadian regulators. And I think there's been some delay in the launch of a drug, and that has impacted the performance as far as Dr. Reddy's is concerned. But having said that, I think the valuation, from a valuation perspective, the stock trades at a very reasonable valuations. I think the stock has been trading in the range of 20 to 22 times trailing 12 months price to earning multiple. But we are not seeing any respite as far as the stock is concerned, and I think continue to see pressure. So I think it would be better to see some relief which comes to the company before taking an exposure over there. But having said that, I think valuations still continue to look very reasonable. And as far as Cipla is concerned, again, it's been a very an ordinary set of numbers. We've not seen any major sparks over there. The domestic markets or the emerging markets, the developed markets, I think very nominal growth as far as the performance is concerned. So again, Cipla 2 trades at very reasonable valuations around 23, 24 times. So makes it compelling case, but I think growth is an issue which needs to be addressed before there is any meaningful correction on the upside.
Okay, all right. So that's with regards to where Dr. Reddy's and Cipla is concerned. But the other FMCG giant that is expected to post its earnings today is Dabur. In fact, we'll also have ITC and Swiggy earnings also coming in. But specifically with regards to Dabur and as to what you can expect, Sharad, they came out with their business update where they've clearly said that consolidated revenue will be around mid-single digits. Overall operating profit will also grow in line with where the revenue stands, and consumption is expected to strengthen, of course, because of the GST cut. But so far, for the numbers that have already come in for FMCG, a lot of these FMCG staples have been impacted because of the inventory correction.
Inventory correction, and I think that the inventory correction was coming from the GST news flow rationalization. But Mahima, the margin segment, has this in the entire FMCG industry, this margin pressure, whatever was that, is that, kind of bottoming out, or we'll have to wait for a couple of quarters?
So I think we'll have to wait for a couple of quarters. Now it's started to stabilize a bit, maybe not bottom out, because we'll still have to see certain raw materials like cocoa, coffee, which are still facing inflationary pressure, right? So all of these counters, how they move will decide the overall inflationary pressure that is being put on margin. The other aspect with regards to where margin stands is they're going very high when it comes to promotional and advertisement spends, right?
This will be a seasonal, yes, and festive season is on, so higher AP spends.
Right. So overall, that's also putting pressure on margins, and this is there to stay. This will be decided on the back of companies and their decision at the end of the day. And companies have strongly come out and said, companies like HEL, in fact, have come out and said that they will be, spending the same as they were earlier also when it comes to promotion and advertisement spends. But overall, key monitorables for this, of course, will be how volume growth is coming in for Dabur, and of course, what's the commentary on demand for urban versus rural. And of course, beverages portfolio will be something to watch out for because extended monsoons will have impacted that as well. So that's with regards to where Dabur stands. But Kush, quickly, your view with regards to where charts are concerned for Dabur?
Yeah, well, I think in line with what most of the other stocks are doing, not going anywhere, sideways consolidation, there was a minor bump. So right now, the 200-day moving average is being tested, in fact, for the last 7 days, but without any meaningful direction. So I would wait and watch. And in any case, like I've done in the past, I don't recommend a trade just, on the eve of results. So I wouldn't suggest a trade even now. For now, as I said, consolidating, I would give it a miss. The two stocks that I like in this space are Tata Consumer and Britannia. And even Britannia is starting to show some weakness. So maybe, by default, the only choice for me in this one is Tata Consumer Products. Showing strength, continues to hold on. A break above the 1180-85 zone will push the stock higher. So I remain constructive on only Tata Consumer in this space.
Kush pick is Tata Consumer Products in the entire FMCG space. Before we slip into a quick break, US President Donald Trump described the meeting with Chinese President Xi Jinping as a 12 on scale of 0 to 10, and that's a very interesting scale, meaning it was way better than what we had expected. Let's listen in.
We're going to issue a statement on some of the details. But overall, I guess on the scale of from 0 to 10, with 10 being the best, I would say the meeting was a 12. Okay, I think it was a 12. I think, very importantly, just the whole relationship is very, very important. And I think it was really good.
let's call upon stage the man himself, chairman of the Raymond Group, Mr. Gautam Singhania.
What is different about the opportunity that India presents right now in this decade versus what you may have seen over the last 20, 25 years?
I think it's the emergence of the middle class. There's an aspiration. Every middle class individual has an aspiration to want more. The Indian consumer has a lot of trust and belief in Raymond.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian.
Good afternoon, welcome and welcome back. You're watching India Market Open. I'm Alex Matthew, with me here. I haven't gotten used to that yet. Okay, it is India Market Close. I will eventually get used to this. I might say it a couple more times, but you know what this show is all about. We are, in fact, just about an hour away from the close of market, even though I'm excited for the start tomorrow, and I started India Market Open early. But let's take a look at where the markets are right now. You have the benchmark Nifty 50 that is down about 0.6%, and it is below that 25,900 mark as we speak right now. And the broader market's also losing a tad bit of ground. By the way, the benchmark at the low point of the day. We'll look at the constituents in just a bit, but before we do, Midcap Index down about 0.25%, small cap index also down about 0.2%. And now let's pull up the constituents of the Nifty 50 just to tell you what is moving where. You have the benchmarks, you have Reliance Industries, HDFC Bank, which in the recent past have actually contributed on the upside, which are now pulling the benchmark lower. And you have L&T on the upside that is contributing just a tad bit. Pull up the heat map for the Nifty 50 very quickly just to see how much red is on screen, and there is quite a bit. In fact, 38 constituents of the Nifty 50 at this point trading with cuts, the worst of which are with Dr. Reddy's Laboratories. We've already told you about that, or rather Sharad would have told you about the reasons why Dr. Reddy's Laboratories is getting beaten down, and so is Cipla, by the way, after the results that it posted not too long back.
But the interesting comment over there is Umang Vora is stepping down, and that will probably change some things in terms of strategy as well. Let's see, it's anyone's guess, but that's going to be an interesting one to watch out for as well, Alex.
On the flip side, Larsen & Toubro has lost out a little bit from the start that it had. Pretty good set of numbers, and in fact, more than anything else, the order book that it has announced and the incremental orders that it has won during the quarter are what is enthused the street, but it's off the high point of the day. Coal India is the top gainer at this point, up about 1.5%. But, you know, there are a lot more stocks in the broader markets, and before we go to Sharad for a very interesting piece that we've lined up for you, I'm going to go across to Hiral to take you through some of the newsmakers. Earnings front and center once again.
Earnings front and center as well, but you know, Chennai Petro, yesterday we did discuss this on the show, it was the top loser. Today you see the kind of pullback a Chennai Petro has seen. It's at the day's highest.
Right?
Yeah, like 7 to 8% up move coming in on a Chennai Petro. Policy Bazaar is another one. 5-star on the back of the con call commentary. Very strong commentary on a 5-star, and that's the reason why you're seeing gains of around 6 to 7% on that one. Vaibhav Global cooled off slightly, but strong moves on Vaibhav Global as well. Shelly, has been losing out. Shelly Engineering, 10% downtick on that one. Sharda Crop trading under pressure. You have all your, telecom players from an Idea to an Indus Tower, Bharti Airtel. And this is on the back of the fine print in the AGR dues. That's what is putting pressure when you talk about all the telecom players as well. South Indian Bank, LIC Housing Finance also on the back of earnings, seeing cuts of little over 4% in trade. So a lot of movers and shakers, but the sharks have actually made it to Dalal Street, and that's the conversation. In fact, one by one, they've been making their dips, and the last one, has taken the boat already.
Taking the boat. I like that. That play on words.
Yeah, I mean, the last one has taken the boat, and I think it's Sharad who's going to come back to us and tell us, what are the sharks actually doing, because you have all of them who are on Dalal Street now, Sharad.
Well, it's very interesting, and to start with, startups agar tank hai, to Dalal Street ek darya hai. Now let's get the sharks. They are arriving on Dalal Street, and there are 5 sharks currently whose listed companies are already there, and 2 of them are about to get listed as well. Let's get them one by one. What's their actual journey been and how they have performed? This is the result report card. It's there. Namita from MQ Pharma, her IPO size company was roughly 1950 odd crore rupees. Eternal, that's the first class of 2021 the startup had come in. Almost 9,375 crores fundraise coming in. Ghazal's Honasa Consumer, that's around 1,700 crore. They both had fresh issue as well as OFS component, and the much talked about IPO Lenskart. Piyush Bansal's 7,300 crore IPO size coming in, and Hiral had pointed out at last Aman Gupta also has come with his board, but he has reduced his IPO size, almost 3,000 odd crore. That number has come down to 1,500 crore rupees. That'll be very interesting to track as well. Now let's see how the performance has been. The sharks are, all of them are under my lens, and we see the listing price and the current price, how we have taken these numbers. Honasa is the only company, Ghazal's company, where there has been a 15% downtake coming in. If we compare it from the listing price itself, there was a bumper listing, but a volatility in Eternal's counter. But look at the numbers, 54% gains coming in. MQ and Pharma, nothing has happened yet, and it's flattish right now. But the street will be looking at these 2 counters going ahead in the future, especially from Lenskart, what the listing price is. As per my channel checks, the grey market premium is roughly 15 to 20 odd %. Let's take in another parameter, and that's the IPO price. From the IPO price itself, we see Amita Thapar's company has just got 38% returns, but the one who has delivered the most is Zomato, 363% return. Institutions turning bullish. But on the other side, of course, there was a change in the business model also for Honasa Consumer. That has come down at 9 odd %. And these 2 numbers will be watching out for. So this is the entire report card, what the sharks have delivered in Dalal Street. And lastly, let's look at the date lines, how it has started. From 2021, the class of 2021, Eternal started coming in earlier. It was called Zomato. And then MQ Pharma, Honasa, they also came in the last 2 odd years. And right now, the current lot is Piyush Bansal's Lenskart. That's around 10th November. The listing date is expected to kick in, and next 2 to 3 odd months, Aman's boat will also be floating in Dalal Street's water. But what will be the numbers going ahead for all these shares, all these sharks and their companies? Will be something to watch out for. But abhi ke liye mera itna hi expertise hai. I'm out.
You're out.
Well, the Lenskart IPO valuation is going to be one of the key concerns. What happens on listing day is what we need to see. Secondly, you have Groww, which has entered also, not as a part of the sharks, but if you talk about Groww, where the valuations stack up, that will be closely watched out for.
Whether it's adjusted.
Yeah, adjusted or not, and whether it continues to grow or not.
But let's speak about a stock that is already listed not too long back, Hyundai Motor, posting its numbers for the second quarter, and the revenue is coming at 17,461 crore rupees. It is a tad bit below what was expected, and that number that was penciled in was at about 17,638, but the margin is actually better than expected. 14% is where it's come at, and the expectation was 13.4%. Puneet has been looking at those numbers as I speak to you, and he's joining in now to tell you about the details. Puneet, seemingly a beat on the margins, or at least better than expected, and that's having a bearing on the PAT number, if not a beat slightly above expectations. What are you picking up?
Well, thank you for that. It's definitely a good set of numbers from the company, because in this quarter, the volumes actually fell by 1% for Hyundai, while someone like Mahindra & Mahindra as well as Maruti actually reported 3 to 5% growth, at least on a minimum level. So the margin number was the most important number for Hyundai, and right now we're seeing a slight positive impact, not so much in terms of a runway share price reaction, but it's largely on the number of the margins, which is coming at 13.8 to 13.9%. Now, we were going with a number of 13.4%, which was almost a 40 basis point increase from the same time last year. So definitely a big beat has come on that. A couple of factors that could have played in favor of the EBITDA is, one is of course the share of higher premium models, which has increased the average selling price of the company and in turn has a positive impact on the margins. And the other key aspect is also that the other expenses haven't inched up as materially as expected. So despite this being a heavy quarter for marketing that all auto companies do, it seems to be having a limited impact, at least for now. And the advantage was that Hyundai had limited launches in this quarter. What I'll be watching out for in this, from the press conference also that's scheduled at 3:30, and we'll get you all the highlights, will be what are the expectation on launches, because one of the major models, the Venue, is expected to launch on the 4th of November. That's almost 1/4 of the company's volume. So a relaunch of, or at least a refurbish of the second model essentially of Venue will be the one to watch out for. But in terms of the profits, also it's largely come in line with the number that we are going with. But the EBITDA margin number is the most important in this results, and that has come much ahead of the expectations that we were working with, at least with 13.4%.
But thanks, Puneet, for that. The stock not reacting too much. Yes, it's trying to make its climb right now. Let me go to Nirav. Nirav, what do you make of the numbers that Hyundai has so far posted? Because after TVS, this is the first four-wheeler that has posted numbers so far. And you will have auto sales numbers that will start trickling in over the weekend as well. But your first reaction to the numbers?
Well, I've always believed that Hyundai is basically a silent performer, and I think a good set of numbers from the company, and always impressed with the product mix. I think the focus which is there towards premiumization, the positioning of Creta, the kind of market share which they have in the SUV segment, the 72% share which they have over there. And I think apart from that, they are trying to enhance their presence in the rural markets as well. There is a focus on exports also. So I think a very, very strong presence in all the right segments at the right time. And recently they've done a presentation also where they are talking about very big expansion plans. They plan to invest around 45,000 crores from 2026 onwards till FY30, which will give them an incremental revenue of around 1 lakh crores. So I think the future seems to be quite exciting. And as far as the EBITDA margins are concerned, any EBITDA margin which is 14% or above generally falls into a positive reaction as far as the markets are concerned.
Okay, so that's a pretty comprehensive view. It has moved off the low point of the day. It's had a pretty choppy session and it's moving higher as we speak. As Nirav has been speaking about all of the positives for Hyundai, it has been moving higher. Kush, the question to you then, it's moved from negative to positive, trading with gains of 1%. Would you buy at this juncture though?
Hi, Alex. So from a positional standpoint, this makes a good bet. The reason is that, if you look at the entire rally that started from those 1,500 odd lows all the way up until 2,900, this is very close to the 50% retracement around the 2,200 mark. So if you want to enter for a very favorable risk-reward ratio, these are good levels. The downside seems rather limited from here on. So yes, with the stop loss around the 2,200 mark for higher levels of about 2,600 and the recent swing high of 2,900 as well, makes a good bet. You're starting to see early signs of revival with the price moving higher, crossing the 20-day moving average today, and also accompanied by fairly healthy volumes.
That's pretty interesting. Hyundai Motor by the dip kind of a situation coming in here as well. Stock trading at around 2380 odd levels. Moving on. Top stocks on profits radar are Lemon Tree Hotels, Dilip Buildcon and NBCC. Jasmeet joins us with all the details. Jasmeet, what you are gathering from these mid-cap, small-cap names?
All right, thank you for that. Starting off with Lemon Tree Hotels, well, this is big, where the company signs in 600 plus rooms alongside the RG Corp. Well, this particular properties, the two properties based out of Guwahati and Ayodhya, both are tourist friendly, and this particular property falls under the premium chain of the hotel. And since 2004, from the first property, the company currently has 240 plus properties all across India. Well, the next one is Dilip Buildcon, where the company secures an order from ISC Projects, and the order is worth 307 crores, and the order is in the space of construction, while the order is for the railway construction and track joints. While in terms of the next one, I have NBCC, and the company again receives an order in terms of construction itself, but the order is worth 79 crore. There are two orders in this particular split, and the aggregate value is 79 crore, while the order is from the ICAI, the Institution of International Chartered Accountancy of India. So these are three other stocks buzzing in trade today on the back of order win as well as deal signings.
Yes, thanks Jasmeet for that. In fact, Kush, what are charts indicating for all these three names? Some bit of an upside today. Would you be a buyer?
So I'd park Lemon Tree for just a while because, it's facing that falling trending resistance, the 50-day moving average also. So 170 is a bit of a resistance. While the uptick is healthy, as I said, I'll just park that for now. I find the other two names rather interesting. NBCC has had a good move, not just today, two good moves. Yesterday and today, healthy volumes. The stock is breaking out above that 116 zone. So yes, the momentum could persist here. 121, 124 are your targets. Now that resistance around the 116 mark will act as a stop loss. So a healthy move on this one. Dilip Buildcon also, the move is not as encouraging as NBCC, but yes, the stock's tested the 200-day moving average and starting to spike higher. I would suggest more of a hold approach. So if you have a position, you could continue to hold with a stop loss at 480, but things starting to look constructive for Dilip Buildcon as well.
Okay, so that's with regards to the view coming in from on a Dilip Buildcon that we're looking at. And, this is very, in fact, this has been a stock which was actually at one point in time at levels of 900 as well. And from there, it's actually very much close to where its IPO price is. Let me get a Nirav's view as well. Nirav, anything with regards to a Dilip Buildcon or a NBCC, if you have to look at infrastructure as a space?
Well, I think as far as infrastructure is concerned, I think I will stay away from Dilip Buildcon because the stock has been a disappointment. They had some very good orders, but I think execution somewhere did not meet the expectations, and of course the cash flows were not sound enough. So I think would stay away from Dilip Buildcon. And as far as NBCC is concerned, yes, it's on a rising trajectory. It's starting to get good orders. So I think can definitely accumulate with a medium to long term view. Overall, the view on infrastructure remains very, very positive.
Positive view on infrastructure. All right, it's that time of the day where my colleague Soumit Sarkar brings you all of the chatter from the dealing rooms in our segment called Heard on the Street. Soumit joining in now. Soumit, what are you picking up?
Well, markets might be on a downturn today, most likely because of profit booking, but multiple stocks that bullish trends as what dealers have indicated for multiple stocks. Firstly, it's Siemens Energy. There are buy flows on institutional desk is what dealers are indicating. Both FI and domestic institutions have been buying this counter. The two key triggers that would come in for Siemens Energy now going forward is a strong second quarter number, and the second one would be potential MSCI inclusion. Now, the names for MSCI would come out on November 5th. So keep an eye out for Siemens Energy. For Religare, there are buy flows on PMS desk, and dealers are indicating that the demerger announcement could happen soon for Religare. For Star Health, there are buy flows at lower levels on DI desk. Dealers believe that the worst seems to be priced in for Star Health. Now, yesterday the stock was down around 5% odd in trade. Warren Beverages, now that counter was up 10% in trade yesterday, but today it's down around 2.5 to 2.5% in trade. Now, dealers believe that yesterday's move was largely because of short covering, and they also say that the beer opportunity in Africa is quite limited, and hence we are seeing this some correction in the share prices today. When it comes to Kalyan Jewellers and Titan, again buy flows is what dealers are indicating on HNI desk for both these jewelry names. They're expecting the commentary to be quite strong for sales or demand going forward that could come in from both these names. For Shell Engineering and Exigo, Both these counters are down because of their own problems. BHEL Engineering is down because Dr. Reddy's semaglutide drug in Canada got delayed, and Shelley was one of the suppliers. So Street believes that BHEL Engineering numbers could be impacted. For Exigo, the stock is down because of the Q2 numbers. But dealers are indicating that prominent HNIs who are already holding shares in these counters have accumulated some shares at lower levels in trade today in BHEL Engineering and Exigo. And lastly, AB Capital was part of our segment on October 28th, where we did indicate that there are strong buy flows on institutional desk on expectations of strong Q2 numbers and potential MSCI inclusion. The company has reported strong Q2 numbers and the stock is up nearly 5% in trade today.
Interesting, very interesting. Thanks so much, Somit, for that. A couple of stocks that stand out to me, Exigo as well as BHEL Engineering. Exigo, on the back of those numbers, that one-time cost on ESOPs having a bearing on the stock, on the performance in the second quarter, and posting a loss compared with a pretty decent performance in the previous quarter. And you probably remember this, when the numbers got posted, it was overnight. It was, in fact, post-market hours, and the next day onwards, there was a pretty one-way rally in the stock price. Around July is when that started. 17th odd of July was when the numbers came in for the first quarter, and then it had a one-way run. It's, of course, dropped quite considerably from the high point. The question is, Nirav, if smart investors are buying more with these 15% drops, would you say that that makes sense? Do you have coverage, first of all?
We don't have coverage, but definitely it does make sense because when you have such exceptional events and you have one-off events which put pressure on the profitability or which result in a loss in a particular quarter, and when you know that the business model is established, then definitely it warrants an investment. It's an investment opportunity.
I just very quickly wanted to get a view from Kush. Kush, if you have a view on Exigo specifically, would you say that there is a possibility of further declines, or would you say that a bottom could have been hit?
No, in all likelihood, it will be the latter, Alex, because, the 265 levels being tested a few times already. We are seeing a rebound from those levels today as well. So yes, yet again, I seem to be repeating myself, but again, for an aggressive trader with a 265 stop loss, favorable risk reward ratio, Exigo also, like some of the other stocks we've discussed today, seems like, a decent buy at these levels.
Okay, so that's the view coming in terms of where Exigo goes. But moving on, we're just one day away from November, and after a stellar October, I think this is the best October that we've been discussing since 2022 or 2023 as well. Nifty clocked its best monthly gain since March, and all eyes are now on how November is expected to look like. It seems historical data is telling you probably it will be directionless, but what is one going to watch out for in terms of benchmarks, mid caps and small caps? Somit is going to tell us in terms of what the seasonality tells us.
If you look at the October month, it has been quite strong. More than 5% return is what we have seen so far in the month of October, which is the highest monthly gain for the Nifty index, which is the benchmark index, since March 2025. But what's in store when it comes to November 2025? Now, if you look at the Nifty 50, in the last 10 years, it has managed to close in green 5 times with an average return of 1.6%. Now, there have been nearly 4 instances where the index has managed to give more than 4% return, and that's in 2018, 2020, 2022 and 2023, while more than negative returns of 4% has been seen only once in 2016. Now, when it comes to Nifty Midcap index, in the last 10 years, it has closed in green nearly 8 times. Average returns is close to 2.5%. The 2 instances where the index closed in red was in 2016 and 2021, and nearly 7 times the Nifty Midcap 100 index has outperformed the benchmark, that is Nifty 50. When it comes to Nifty Small Cap index, in the last 10 years, it has closed in green 8 times. Average returns of 2.6%, and negative instance has been seen yet again in 2016 and 2021. Apart from that, if you look at the sectoral indices, Nifty Bank has been the best performing index in the month of November so far. 10 out of the last 10 times, 8 times it has managed to give positive returns. Average return has been 3.5%. Real estate, IT both have closed in green 7 out of the last 10 times, and the average returns have been anywhere between 2 to 3.3%. FMCG index closed in green 6 times, average return of 1%. Nifty Metal, Nifty Auto, Nifty Pharma, if you look at these indices have closed in green around 3 to 5 odd times, while the average returns have been anywhere between -1% to +3% so far. Now comes the most interesting part, that is the stock rated part. Now we have included those stocks that have managed to close in green nearly 8 or more times, and the average returns have been more than 5% for these individual stocks. So which are the stocks in the list? Firstly, Uno Minda closed in green 8 out of the last 10 times in the month of November. Average returns have been close to 16%. Vodafone Idea, KEI Industries, Union Bank and CG Power have closed in green 8 to 9 times in the month of November, while the average returns have been anywhere between 8 to 10 odd %. For Biocon, Fortis Health, APL Apollo and Phoenix Mills, average returns have been close to 7 to 8%, while these stocks have also closed in green 8 to 9 times in the month of November. Now on the flip side, we have taken stocks that have closed in red more than 7 times or at least 7 times, and the average returns have been more than -2% in the month of November. Limited list, Suzlon and Cipla, average returns of -2.4%, and these stocks have closed in green 7 or 8 times in the month of November. Thank you very much, Soumit, for giving us the November trends. And Alex, there is a song also. I think you track a lot of songs. Is the song correct? Wake me up when October ends?
No, you've got the number wrong.
Okay.
What? It's No Shave what?
November?
No Shave November?
Well, for us also there is no shave.
So, but it's neither October or November. I was just tricking you. It's actually September.
September.
Oh.
Got it?
Yes.
Anyway.
No, I think
Okay, we obviously are not specializing in songs. Instead, let's go across to Kush. Kush, you've heard the entire list and you've looked at the seasonality chart as well. It's not really proven accurate this year because look at July, right? July has been an incredible month for years together, but we saw the July that panned out. What is your anticipation for November, though, for the benchmark? And did any of the stocks that we discussed stand out to you?
So, Alex, whenever the seasonality analysis comes up, one line that Tamanna had mentioned in the morning show comes to my mind, that we're discussing seasonality analysis in times of climate change. So yeah, doesn't really hold ground. Doesn't really hold ground. But for whatever it's worth, I think one stock that I do like at the moment, irrespective of the seasonality, is Phoenix Mills from that list. The stock's done well, continues to lead the pack, in the realty space. I think the stock has momentum. There is mild consolidation right now, that's going on in the stock, but that's understood because it's had a good run. I won't be surprised to see the stock head to 1775 and 1800 plus levels, in the months or maybe months to come. And the positional stop on this one is at 1640.
So Phoenix Mills becomes your favorite as well when it comes to seasonality. But apart from that, your telecom players have been in focus as well in terms of today's session. And this is on the back of the fine print that we've picked up on the AGR dues. Soumit is still with us to tell us what's happening, what are the key highlights that he's picked up, and what's the kind of impact it could see. Soumit, over to you.
The ruling related to Vodafone Idea was announced a couple of days back, but the Supreme Court judgment order was released yesterday post-market, and 2 points because of which the stocks are reacting. Firstly, the point number 7 out of the judgment order that has come in that clearly states that any relief package can only be provided to Vodafone Idea and not to any other player. Now, this is happening because Government of India owns close to 49% stake in the company, and nearly 20 crore users are still using Vodafone Idea as their mobile network. And this is negative for Bharti Airtel, given the fact that Street was expecting that whatever relief comes in for Vodafone Idea will also come in for Bharti Airtel, but that might not come in, and hence it's negative. Now, if you look for Bharti Airtel, it has AGR dues of close to 40 to 50,000 crore rupees on its balance sheet, which is nearly 4% of its market capitalization. The second point, that is the point number 6, and this is negative for Vodafone Idea and Indus Towers. Now, this clearly says that the claim will be restricted only to the additional AGR demand that was raised for the period up to FY17. Now, analysts believe that this point indicates that the AGR relief might come in only for the amount of 9,450 odd crore rupees. Now, this is a very small amount compared to what the debt of Vodafone Idea is. Now, 9,450 crore is just 12% of the total AGR dues of Vodafone Idea and 4% of the overall debt. So, even if this amount is waived off for Vodafone Idea, the annual benefit for Vodafone Idea will not be more than 400 to 500 crore rupees. So, that will not actually help the company much more.
more, and hence we are seeing this kind of a negative reaction in the share prices. And given the fact that Vodafone Idea is down, Industars is also seeing the indirect impact of this, and hence Industars is also trading down in trade today.
Thank you very much, Soumit, for giving us the entire view on the telecom sector. All the stocks are down in trade. Bharti Airtel down 2%. Industars, that's also significant downtick of almost more than 3%. Nirav, I have a question for you. Telecom space, Soumit mentioned about the negative outcomes coming in this sector, and we are seeing also a profit booking in Vodafone Idea. Perspective-wise, if I had to choose between all these three stocks, which stocks would have a better risk-reward ratio? Because we have seen a strong run-up in Bharti Airtel as well. Industars Street is very bullish on, especially from what happens on Vodafone Idea. What would be your view on that?
Well, the crux of this entire episode is that Vodafone will continue to remain under pressure. The benefits are not that material. So initial euphoria which was there has worn off. As far as Bharti Airtel is concerned, it's seen some very strong positive up move. The stock has been silent since the last 1 year, and finally it started to move. And there could be various reasons for this. Of course, this relief was expected, which did not come. But the African operations seem to be doing quite well. And as far as the domestic markets are concerned, they have the best quality ARPUs. There is a focus towards premiumization, 5G, data centers, etc. So I think Bharti should continue to do well, and this is especially also in the light of the fact that Jio Platforms has filed for an IPO. This is slated sometime in mid of 2026. They are in the process of appointing the bankers to the issue too. So I think Telecom will continue to do well in all probability. And as far as Indus Towers is concerned, the stock is also trying to move out of its problems, and the stock has given a meaningful up move, but it should sustain from the current levels because its price movement generally tends to move in tandem with Vodafone Idea.
Well, that's pretty interesting. Kush, your take on Vodafone Idea. Initially, the start of the trade, the stock tanked 9% but we are seeing some buying happening. I know it's a very risky trade. But in case, is there any hope here for any buy the dip strategy for Vodafone Idea, or you will stay away from this counter? Historically, you have been away from this counter.
Absolutely, and I'm so glad you remember. Also, you went from mind optimism to is there any hope here? No, Vodafone has been on my avoid list, continues to remain so. For anyone who wants levels, I think 8 is a good support zone, and on the higher side, you're looking at 9.5, perhaps 10, rounding it off as some sort of resistance. Vodafone is a very clear avoid for me. I still prefer Bharti, but right now the setup suggests that there could be some declines closer to 2000 levels, and that's where it will become an interesting position.
Thank you very much, Kush, for giving your views, and it's an avoid when it comes to Vodafone Idea. Let's take a quick break. On the other side, we get you top buy today's sell tomorrow picks.
Let's call upon stage the man himself, chairman of the Raymond Group, Mr. Gautam Singhania.
What is different about the opportunity that India presents right now in this decade versus what you may have seen over the last 20-25 years?
I think it's the emergence of the middle class. There's an aspiration. Every middle class individual has an aspiration to want more. The Indian consumer has a lot of trust and belief in Raymond.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now
Welcome back. You're watching India Market Close. Let's quickly just look at what's happening to the markets right now as we speak. Nifty 50 cuts of almost 180 points coming in there. We are near the day's lowest levels. 25,867 is what you're tracking. Let's pull up the Bank Nifty as well and a quick view on the sectoral heat map to understand, which are the sectors which continue to put pressure, which are the ones which are being resilient in today's day of trade. It's only energy which is pretty much on the borderline. But apart from that, Nifty Midcap Select, all the other sectors are in red. But one stock that is in focus today, BHEL. Let's pull up that one on the screens. Bharat Heavy Electricals at the day's highest levels, gains of a little over 6% coming in there. Now, is there a bull case or a bear case scenario that is building up for this counter with the kind of gains that have come in on the back of earnings? Varsha brings us all the details. Varsha, over to you.
Well, thank you so much for that. The stock is buzzing on the back of Q2. Numbers, strong numbers that the company has seen. There's been revenue growth of around 14% with EBITDA margin of around 8%. But this growth is, the growth quality is actually weak, which is led by Forex or mark-to-market gain. So typically not because of execution, the growth that you're seeing is the bear point for this company. Right, now talking about the order book is strong at around 2.2 lakh crore, which gives a solid or rather strong visibility ahead when it comes to revenue. But the order inflows, there's been fall when it comes to order inflows, and execution delays is a risk that the company has seen. Right, talking about the UBS. So UBS has retained by with giving a 15,000 crore of order lifts considering FY26 outflows, but margins are under pressure from low margin product. But this, the bull side for this, the FY26, if you see, is a clean slate year for the company, and in FY27 you will see the margins will rebound, considering 14 to 15% of margin. That's a huge spike you will see in margin when it comes to FY27. But Nuvama had cut EPS by 22% for FY26 and 16% for FY28, considering the various reasons that they've given in their analyst report. But power cap, we have been seeing the capex revival. So power capex revival and diversification add upside for the stock. But overall, if you see, the re-rating depends on timely execution if company will see, considering the 2 lakh order book that the company has. But overall, if you see, considering the today's price, we have seen a good start, rather a strong Q2 which the company has seen. But this Q2 is not on the back of execution, but on the back of Forex gain and mark-to-market gains that the company has seen.
Points that you're raising. It is at the high point of the day. Varsha, thanks so much for that. Nirav, I'll come to you on BHEL. You've said that infrastructure is a theme that you like, but specifically within that, would you say BHEL is something that you would prefer? If so, why? If not, why?
BHEL is a great company, but an inconsistent performer. So I think every time there are some quarters of disappointment, then there is one enticing quarter, one or two enticing quarters, and then the whole thing falls apart. To put the things into perspective, BHEL is into so many exciting spaces. It's into nuclear power, it's into boiler, turbine, generator, which are most vital parts as far as power generation is concerned. They are into the defense space. They are suppliers of some very critical equipment, super rapid gun mount to the Indian Defence Forces, nuclear power. All these spaces are very, very exciting. They are also catering to the railways in a very meaningful way. But still, I think margins have been lagging behind. Execution has been lagging behind, and I think inconsistent performance is one of the main reasons why the stock has been an underperformer, and I think it will continue to remain so until we see a couple of straight quarters of good performance with good execution and good margins.
All right, let's cut into the Cipla press conference, which is ongoing, stock under pressure on the back of Umang Vohra's exit. Listen to what the management has to say.
With passion at the center of the heart and always, running with the theme of caring for life. And I believe where Cipla is today, 11 years later, I think it's reached a stage where it's ready for the future. And it's a solid organization that can continue to grow sustainably. And we've developed a very good talent pipeline that can help take the company forward. So I just think that from my perspective, what the task I had set out to do through my 2 terms is achieved, and Cipla is now in good hands of the rest of the management team and Achin to take this forward.
So I assume you're not retiring from the pharmaceutical space.
Well, not really. I'm not going to retire. But my own view on that is that we probably should not retire till we're 65, 70 or whatever the age that we can work till. So I'm not retiring as yet. No.
Just about Cipla now, there was this sort of stability when you came in for the past 10 years that even if the promoters are not actively involved, there is Umang to sort of steer the ship. There seems to be now a vacuum amongst a couple of analysts and investors that I've spoken to. What is your sense in terms of what the future for Cipla would look like, and would a possible stake sale now be back on the table?
No, my own view is that, and I say this always, Ekta, and with humility, that Cipla is today an organization that is completely professionalized. And I think the promoters, and my due credit to them, they have enabled this. And the organization today is truly run by professionals. The promoter insight and guidance is always there. The board takes a very active role. I don't think there is a vacuum. I think Cipla has enough talent to continue to guide it. And there have been people in Cipla who've worked, who are lifers in Cipla and continue to be there. And I think it's, I don't think there's a vacuum, and I think the stability will be there, right? Every 11 or 12 years, management teams change. And I think the change sometimes is for the good in order to take the company to the next level. So I think we're going through that change here. Yeah.
Sure. But just before I hand it over to the next person to ask a question, just wanted to understand the tie-up that you have, announced with Eli Lilly for Mounjaro, which is obviously going to be branded differently. But is there a revenue share? If you could just spend more time giving us more details in terms of the revenue share, whether it's exclusive, and what does this do to, say, a semaglutide launch for Cipla? Would that be still on the cards, considering that you are selling a competitive product in the market?
So maybe I'll add, there's not too much that we can speak about in the agreement, Ekta. We're very, we have a confidential agreement with a very strategic and long-term partner with Eli Lilly. We practically sell most of Eli Lilly's range today in India. But what I can share with you is that this is a trusted partnership, right, between Lilly and Cipla to service the India market. There is obviously, you're aware that Eli Lilly's brand is already selling, and Cipla will supplement that. I think the other thing that I can say is that, you can expect margin structures to be very similar in the past transactions that we have done with Lilly. And we can't exactly divulge what the margins, etc. are. We believe that tirzepatide is a product with superior science and has the ability to firstly create the type of outcomes that people want. We kind of see it's superior to semaglutide as well. And on sema, depending on how our product gets approved, and how soon we are ready to launch, at some point in time, we'll have more clarity on that as well.
Okay. You also have a $1 billion guidance for the US. Does that still stay?
Directionally, yes, it should. Obviously, when we gave that guidance, we said we would have launches which would come in to substitute what we would potentially lose with Revlimid, and I think directionally that guidance stays even today. This year we may not be at $1 billion, right? But at the same time, we're not going to be so off the $1 billion either.
Okay, all right. I'll join back. Thanks very much, Umang.
Thank you, Ekta.
Next up, we have Vishwanath Pilla from Money Control, promoting you to a panelist.
So that was the management of Cipla clearly talking about his tenure and what his plans are moving forward, and the tie-up that Cipla has with Eli Lilly when it comes to semaglutide as well. But the stock seeing some bit of pressure, mild recovery that's coming from the day's lowest levels. We've already spoken about the pharma stocks overall, but let's quickly shift focus to what's happening in the AI space. Now, India's proposed AI labeling rules, they may have headed for a rethink. In fact, sources do tell us that the government is weighing minor relaxations, and this is to its draft mandate, which could actually reshape how platforms like Meta, Google, and X are handling AI-generated content. My colleague Rishabh joins us with all the details. Rishabh, over to you.
Right, a very interesting development, what we're seeing coming in from the Ministry of Electronics and IT on the AI labeling mandate that they very recently put out. There has been somewhat of some concerns that have come in from the industry with regards to this being a blanket mandate that has been put upon large platforms like the likes of OpenAI, Meta, Google. All of them will have to comply with this, including the likes of AI platforms such as OpenAI or Google's Gemini or Sora or X's Groww. All of these stand affected. And what we're picking up on this is the fact that despite these concerns, the government may not fully roll back the 10% AI labeling mandate, but what it might do is it might soften this burden that's put on companies. It might pull down the mandate from 10% of the audio or video screen length or size from to about 5 to 7%. That is something that we're picking up. Remember, the government is not keen on rolling back on any of this, given the fact that they have cited deepfake as a major threat. There's been various instances of videos coming out of senior leaders also in deepfakes, and that has caused a lot of concerns. What we're also seeing is that public consultation for this is open till November 6th. And we will hear from the government officially on what they plan to do with the consultations that they've received.
All right, thanks so much, Rishabh, for getting us those details. Very important deliberations that will take place on that. Regulations have to be formulated for technology that is moving incredibly fast. Let us know what you think in the comment section. In the meanwhile, let me introduce to you Rajesh Palvia of Axis Securities joining us now for the last few minutes of trade. Rajesh, thanks so much as always for taking the time. It seems for the benchmark, it's 2 steps forward, 1 step back. But that 1 step back is par for the course, especially if you've seen 5% plus increase or return so far in the month for the Nifty 50.
So definitely. So looking at the rally in the month of October itself, some profit taking is happening at higher level, and looking at the call concentration, which is very well placed at 26,000, 26,100 strike, which is creating some bit of pressure for Nifty at, a higher level. But looking at the broader market, we believe that, once we able to take out about 26,000 level, there is a high possibility that, in November series itself, we may see a new all-time high trajectory for Nifty. Bank Nifty is comfortably trading around 58,000 level. So any breakout above 58,300 can take this Bank Nifty further higher to 58,800 also. So both indices are looking, bullish for near-term to short-term perspective. For Nifty, we are keeping our stop loss around 25,700, 750 kind of zone. So till these levels are intact, I think there is no as such, damage in terms of near-term trend. So buy on dips is the strategy for Nifty as well as for the Bank Nifty.
Interesting on the chart, benchmark indices, the view coming in from Rajesh. Now moving on to the small caps. We have Anushi joining us with the small cap buzzers. Anushi, what are you picking up?
Right, so a couple of stocks on the radar now. I'll start off with Web of Global. 45 times is the kind of volume that we are looking at if we just take the 1 month in context. While other stocks like PDS and Shriji Shipping is also seeing higher volumes on account of the recent second quarter numbers that have come out. Firstly, starting off with Web of Global, a strong quarter is what we are looking at, with revenue growth exceeding the guidance that the company has given. Even margin uptick was driven by productivity gains as well as operating leverage. The company, however, despite the strong performance, maintains its FY26 guidance of 7-9%. Coming to PDS now, just a couple of days back, they have also reported a strong set of numbers, and this is the order book climbing to 5,308 crore, up 15% on a year-on-year basis. Even the net working capital saw an improvement. In terms of gross merchandise value, that saw a growth of around 18%. Now, what's also interesting is Zelio e-mobility. If we just see the past few sessions, the stock has been on the radar. This is especially after ace investor Mukul Mahavir Agarwal. He picked up about a 6.7% of a stake in this company, and this is by acquiring about 14.24 lakh shares through its Param Capital is what we are looking at. So that's in focus. And lastly, coming to Shriji Shipping, again on the back of second quarters, it's buzzing. Here, if you just look at the numbers, while that was on the mixed side, margins expanded sharply by 460 basis points in the first half at around 37%. So overall, a strong number is what we are seeing. H2 is also expected to be better than H1. So how that would pan out is also something that we should be watching out for. So these are the 4 stocks on our radar for small cap buzzers today.
Interesting, and quite the list there. Just goes to show that there are a lot of movers in the broader markets. And even if I look at the Nifty 500 at this point, despite the fact that you have the breadth that is favoring the declines at this point, with 313 declines on the Nifty 500, you still have some stocks that are moving quite considerably higher. Something like a Chennai Petro is up about 9.8%. Something like a 5-star Sagility up 7.5%, close to 7%. PB Fintech on the back of results is moving quite considerably, up about 7% or thereabouts. BHEL, we gave you the bull and bear case as well, is up about 7%. And then you have Credit Access Grameen. It had a pretty bleak reaction to the numbers, where despite an improvement in asset quality, it had a decline in the PAT number and it was beaten down, but it's recovered quite considerably in trade today, up about 5% or thereabouts. So there are a few stocks from the broader markets that are doing well. I do want to also pull up the advanced decline ratio if we can, just to showcase how that has moved through the day. And it has more or less been pretty wide for most of the session, favoring those declines. And that just reinforces what I've been telling you about the broader markets. But you know what? It is also that time of the day where a guest gets you a buy today, sell tomorrow call. Just winding down, last 8 minutes odd. Rajesh, anything that you have in mind?
So I think a couple of stocks which are in our radar at this juncture to carry forward trade. First one is UPL from agrochemical basket. Stock is showing sign of consistent buying action, and the way weekly charts are shaped up, we believe 740 would be the target for the stock. So one can buy and accumulate this stock with stop loss of 709. Another stock where we are focusing is NBCC. If we look at the daily structure, stock managed to give breakout of falling trend line, strong buying action in last couple of trading session. Stock is comfortably holding about to all its near-term, short-term moving average. So I think NBCC can be looked at for BTST as well as for positional perspective also. We are projecting target of 125 to 126. On the downside, one needs to keep stop loss towards 115. And another stock where we are focusing is from metal space, Hindalco. Stock is enjoying its all-time high trajectory, series of higher top, higher bottom formation. So Hindalco, we believe that furthermore continuity of uptrend would be there, and possible target towards 884 we may see in the continuation of this up move. So one can buy Hindalco with stop loss of 849.
That's pretty interesting, choices coming in. But earnings previews are also very important. Some of the stocks that will be reporting their Q2 earnings post-market hours are ITC and Swiggy. Mahima joins us with what the street is expecting. Mahima, these two counters are retail favorite as well, and also they're in the consumption space. What are you picking up from this?
Sharad, I'll start with ITC. Overall, the expectation is that the cigarette will see a steady demand, and overall a mid-single digit cigarette volume growth is expected from ITC this quarter. Of course, revenue may rise around 14.5% as per Bloomberg estimates. EBITDA may rise around 1.5%. Margins, of course, may take a hit because of the kind of inflation that tobacco leaf has seen, and profit may rise around 4.3%. Overall, gradual improvement in FMCG business is expected, but of course, the FMCG business again here also will be impacted by the GST rate rationalization because inventory correction will take place. And overall, the pointers or the key things to watch out for in the entire earnings will be, of course, demand normalization both in FMCG as well as cigarette business, margin trends amidst the kind of input cost inflation that we have seen, and of course what are the early festive indicators that are being seen. In terms of where Swiggy stands overall, revenue is likely to see an uptake of around 46.5%, but EBITDA losses are expected to widen by around 14% as per Bloomberg estimates, and net loss also is expected to widen by around 46%. And this is largely on account of a couple of things. First one being them burning cash with regards to where discounts are concerned, because the competition is very high in the quick commerce space, plus their aggressive expansion on dark stores as well. So all of these factors will kind of impact the profitability, and plus food delivery growth has been facing headwinds as well. Steady growth in the food delivery, however, could be expected because of Bolt. We'll also have to see as to how execution this quarter has been for Bolt, which is a 10-minute delivery. Rising order volumes, improved monetization, and early signs of operating leverage could be expected from a Swiggy. Instamart to outperform food delivery, and EBITDA losses from quick commerce to remain elevated. We'll also have to wait and watch out for the commentary with regards to how they are seeing EBITDA profitability path from here on. Key things, of course, the new business performances that they've recently launched, be it toying or be it snack, scaling up of Bolt, of course, and lastly, what is the kind of cash burn that has happened this quarter as well, because they were at around 5,000 crores of cash last quarter. How much of that has burned, and what is the runway left for them?
So that's with regards to what is expected. In terms of Swiggy, and tomorrow will be a good day to do a comparative analysis between Swiggy and Zomato once the earnings come in. But Neera, very quickly, any expectations that you have as to what the street should be watching out for from all these names?
Well, I think both ITC and Swiggy and as well as Dabur are likely to post very ordinary set of numbers. Swiggy is likely to disappoint a bit. And as far as Dabur and ITC are concerned, it's going to be a very, very lackluster set of numbers.
Lackluster set of numbers. Specifically on ITC, if I remember correctly, Rajesh, it's been hovering around that 420 mark for quite a while. Is there any possibility of a breakout on the charts, or do you think that it will continue to remain range bound?
So if you analyze the weekly structure, stock is still in down sloping channel, and stock is struggling to cross this upper sloping trend line resistance zone. 420, 424 is the key hurdle for the stock for this pullback action. Yeah, so looking at the last 3-week price action, this is third consecutive week where stock is making higher high-low formation. So I think, yes, stock is poised for giving breakout above 424. And if it happens, then rally can extend to 445 to 460. So those who are already long side of trade can hold the position with the stop loss of 414.
Okay. All right. So that's the view on ITC and on the charts at that. By the way, you have the banking index that is seeing cuts of about 0.5%, and not too many big movers there. If anything, HDFC Bank was one stock that was pulling the Nifty higher in the recent past, but it's proving to be a bit of a drag today. The worst performer on the Nifty Bank, down about 0.8%. Quick view, Rajesh, on this one, and on Reliance Industries. Would you buy into these?
So I think both stocks are, showing same kind of behavior. Reliance again, fizzled out really again, which we have witnessed. 1500, 1520 acted as a supply zone. So, but looking at both stock, I think Reliance is looking much better compared to HDFC in terms of large cap space. So Reliance can extend its gain if it's able to give breakout above 1510. possible rally towards 1560 we may see in the near term. So one can buy Reliance with stop loss of 1470.
Neeraj and Nirav and Rajesh for your time and giving both the technical as well as fundamental perspective. But let's go back to the closing of the markets. It's been a session where we have seen downticks coming in both the benchmark and the broader indices as well. Let's focus on the numbers. Nifty closing below the 25,900 mark, and Nifty Bank also near that 58,000 mark. We see it's almost down 0.6%, 300 points cut happening. Let's pull out the heat map for the Nifty earnings and see what's happened. Sea of red coming in, Dr. Reddy's and Cipla taking the major hits. In the green, we have, of course, L&T trying to reduce its kind of up moves coming in, but FMCG, certain names are still in the green as well. This is the entire picture for the Nifty heat map. Let's pull up the advanced decline ratio, how things have moved out. And overall, if we see, the declines are actually almost double, you could see, and there's a wide gap coming in between both these indices. Also, let's look at how the Nifty Small Cap 250 and the Nifty Midcap 100 index has tracked. And this was, of course, a recovery attempt being made, but still faring better than even the benchmark indices. That is an important trend which we'll be watching out for. Let's pull up the BSE 500 index and see what the key contributors are, what they have been doing. PB Fintech, that's up almost 7% on the back of earnings. BHEL has done well, and also we could see AB Capital and Five Star Finance doing wonderfully in the day's trade. Largely, these are earnings-specific trades, AB Realty as well. In the losers, Vodafone Idea, we had spoken about the telecom stocks which are under pressure. Dr. Reddy is coming in, and names such as Industars and IEX on scuppling news flow also making it to the list. So largely, this has been the day of the bears, but let's see how the preparation actually pans out. And the cues for tomorrow, this includes ECP International rate decision. This is likely to be withheld. That means there won't be much changes. That's what the expectations is. And the speech coming in from spokesperson from Fed as well. US GDP growth rate and initial jobless claims will always be there. And Fed rate cut we saw yesterday, but the tone overall has turned hawkish. Phoenix Chemicals bonus would be there. That's a key 4:1 ratio announcement to be looked at. An interim dividend, these stocks you could see on the screen where the action is. But another place where the action will be the earnings. Earnings is very important, as we're in the middle of the earnings, and largely 20-odd Nifty companies have reported their earnings. ITC today, post-market hours, ITC and Pidilite and United Spirits, largely consumption names would be in focus. Also making it to the list is Dabur and DLF, Swiggy as well. So these are the important stocks which we will be tracking post the market hours. But for tomorrow itself, that's also an earnings heavy day. From auto space, we are having Maruti Suzuki, BHEL, and even BPCL and Vedanta making it to the list. Also looking at stocks such as GAIL and Godrej Consumer also making it to the list. Also other stocks in focus would be very important, but primary market, that's something to look at. And the sharks have arrived at Dalal Street, and Lenskart IPO opening will be there tomorrow as well. So a lot of action in the secondary as well as primary markets would be there. But that's it for India market close today. Keep watching NDTV Profit, and the next stop is the Market Express, where Himanshi gets in all the key details of whatever has happened throughout the day.
let's call upon stage the man himself, chairman of the Raymond Group, Mr. Gautam Singhania.
What is different about the opportunity that India presents right now in this decade versus what you may have seen over the last 20, 25 years?
I think it's the emergence of the middle class. There's an aspiration. Every middle class individual has an aspiration to want more. The Indian consumer has a lot of trust and belief in Raymond.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you.
Hello and welcome. Good afternoon. You're watching Market Express and I'm Malika Mishra. Let's get straight into the show. First up, markets end choppy day of trade in the red as cuts deepen towards the last leg of trade. While Sensex dips almost 600 points, Nifty struggled to settle below 24,900. HDFC Bank, Reliance and Bharti Airtel contribute most of the Nifty's fall, while counters to the likes of L&T, Coal India and Bharat Electronics showed marginal gains. Although positive, no solid consequence from Trump's meeting, rupee depreciation and pressure in pharma stocks affected overall investor sentiment. Let's take a closer look at the sectoral picture now. Most sectors ended the day in the red. Finance, bank and consumption were the top laggards. Pharma and FMCG were also on the back foot. Energy and realty remained resilient and ended the day with a tinge of green. Let's now look at some earnings buzzers. Cipla posted strong sales this quarter, but the financials reveal significant operational pressure. The pharmaceutical major delivered robust revenue growth, jumping over 7% year-on-year and topping 7,500 crore. However, converting those sales into profit proved difficult. Cipla saw its key operational profit margin squeezed down to 25%. This drop meant that operational profit, or EBITDA, was virtually unchanged, climbing by less than 1%. Net profit managed only a modest gain of just under 4%. The company has officially announced a major leadership transition. Long-serving global CEO Umang Vohra will step down at the end of his term in March 2026. Let's keep it going with earnings then. Infrastructure heavyweight Larsen & Toubro delivered quarterly revenue and margins perfectly in line with street expectations, but the real story here is the future pipeline. L&T's order inflow surged an incredible 39% in the first half of the year, signaling massive momentum across their businesses. This performance has management confident they will easily surpass their initial annual order inflow target, and they remain firmly on track to achieve 15% overall revenue growth for the year. The strong execution and bullish guidance are clearly resonating with the street. Major brokerage houses are unanimously maintaining their buy ratings and have moved quickly to hike their target prices. Mahanagar Gas delivered a very weak set of numbers for the second quarter with massive margin pressure, raising significant questions about operational stability. While the company's revenue slipped only marginally, the real pain came on the profitability front. Operational earnings, or EBITDA, plunged by over 32% year-on-year, and this severe drop annihilated the margin, which collapsed from 24% last year down to just 16.5% this quarter. This operational squeeze hammered the bottom line, with net profit taking the biggest hit, crashing by nearly 40% in fact. Let's keep it going with earnings then. Steel Authority of India, or SAIL, managed to prevent a major financial setback this quarter by executing a smart operational strategy. Falling steel prices were a headwind, leading to a direct decline in their net sales realization. But management successfully counteracted this loss. Strong volume growth combined with a better product mix pushed total revenue up by 3%, narrowly surpassing last year's figure. Despite this operational success, the price pressure was evident in the profits. The operating margin fell to 9.5% and net profit took a major hit, declining over 43% year-on-year. On the balance sheet side, the company continues to focus on financial health. Efficient management of working capital helped SAIL reduce its net debt quarter-on-quarter, a key positive in the current soft pricing environment. United Breweries, the parent company of Kingfisher, delivered a disappointing second quarter, largely due to external headwinds. The top-line revenue was down 3%, a direct result of a mid-single-digit drop in beer volumes. The company directly attributes this drop to an unusually strong and extended monsoon season, which kept consumers away from celebratory outdoor drinking occasions. Despite the volume slowdown, UBL's strategy is holding up. The company managed to expand its price mix by a high single digit, showing they are successfully increasing prices. Crucially, their premium volume segment surged in the low teens, signaling that consumers are actively trading up to higher-end brands. However, the relentless rain meant the volume losses were too heavy, cancelling out the pricing gains and dragging overall revenue into the red for the quarter. Sagility India delivered a strong second quarter. The company reported continued traction in its core business. Critically, Sagility successfully converted those sales into better margins, with the reported EBITDA margin reflecting significant operational efficiency during the quarter. Management did clarify that this adjusted EBITDA figure excludes other income and forex gains, confirming the strength is purely operational. Now, this solid performance has led management to adopt a very bullish outlook. Sagility has increased its revenue guidance in constant currency terms to 21% plus for the year, and they expect the strong business momentum to hold firm throughout the second half. State-owned engineering giant BHEL is reporting a strong recovery driven by a major upswing in demand for power equipment. BHEL's strong growth this year, this quarter in fact, was led by robust execution, showing that projects are finally translating into revenue. Now, the crucial power segment saw a massive jump in sales, rising over 45% year-on-year. Now, this power revival, combined with solid 18% growth in their industrial segment, signals a broad-based recovery for the company. Dilip Bilkon has announced a key contract win, securing a significant new order worth 307 crore rupees from ISC Projects. The contract is focused entirely on railway infrastructure and track construction, a high-demand area for the government's infrastructure push. The company expects to complete the entire project within a 24-month timeline. NBCC, the state-owned construction firm, has announced the win of a new set of contracts, bringing an additional 79 crore rupees into its order book. These multiple orders come directly from the Institute of Chartered Accountants of India, ICAI, and are centered on various general construction work. While the total value of 79 crore rupees is modest, securing steady construction work from a prestigious institution like the ICAI provides a reliable stream of business and further diversifies NBCC's already large project portfolio. Moving on then, let's talk about the travel tech firm Exide. That posted a challenging quarter though, where operational growth decelerated while costs surged. The biggest financial hit came from employee costs, which effectively doubled year-on-year. Management attributes this massive spike primarily to the allocation of employee stock options, also referred to as ESOPs. This sharp rise in spending comes at a time when top-line growth is slowing down for the company. Exide saw its gross transaction value grow by 23%, a significant slowdown compared to the previous quarter's 55% jump. Domestic manufacturer and seller of two-wheeler helmets in India, Studs Accessories, has been subscribed 84% on day one so far. The company has set the price band in the range of 557 to 585 rupees per equity share. The offer will be open for till November 3rd for investors to subscribe. Investors can place a bid starting from a minimum 25 shares and in multiples thereafter. The company is raising over 455 crore through an offer for sale of 77.9 lakh equity shares. Studs Accessories IPO is an offer for sale with no fresh issuance. Lift Capital Services and ICICI Securities are the book-running lead managers for the Studs Accessories IPO, while MUFG In Time India Private Limited is the registrar to the offer. Airtel, Vodafone and Indus Towers are in focus after the Supreme Court's AGR judgment was released today. The order restricts any relief package only to Vodafone Idea, not other telecom players, making it negative for telecom peers. The top court's written judgment stated that the order pertains only to Vodafone Idea due to peculiar facts and circumstances of the case. The order does not reference the telecom company's previous plea seeking a waiver of penalty interest and penalty dues, suggesting that the Supreme Court's consideration was confined only to the reassessment of the additional amount. The US Federal Reserve cut interest rates by 25 basis points on Wednesday, while lowering the target range to 3.75 to 4%. Now, this marks the second time the Fed has cut rates this year, having already issued a 25 basis points rate cut in September. US Fed Chair Jerome Powell said that December rate is not a foregone conclusion, which may have serious implications for the Indian market. Wall Street did not approve of the comment from Powell, with the Nasdaq falling almost 1% immediately after the announcement. Dow Jones also had a 0.75% negative reaction to the announcement and ended the day in the red. Big move in the bullion market. India's gold investment demand has hit a record $10 billion in the September quarter, according to the World Gold Council. Analysts say rising prices, festive season buying, and a weaker rupee all boosted investor appetite. The surge marks one of the strongest quarters ever for Indian gold demand. And global fast food giant McDonald's is betting big on India, launching its largest overseas innovation hub right here in Hyderabad. The new center will focus on technology, automation, and digital solutions to enhance restaurant operations worldwide. The move underscores India's growing role as a global tech and innovation powerhouse. And on to some news on Donald Trump. US President Donald Trump on Thursday said tariffs on Chinese goods would be reduced to 47% from 57% after what he described as an amazing meeting with Chinese President Xi Jinping in South Korea. The US has also extended the suspension of 24% reciprocal tariffs for 1 year. In response, China has agreed to adjust countermeasures. Trump also agreed to cut fentanyl-related tariffs on China to 10%. Trump said a lot of decisions were made during the talks, which he said ranged from trade and technology to even rare earths. The announcement marks the most significant easing of trade tensions between Washington and Beijing since Trump's return to office this time. And China has suspended rare earth-related measures and will halve export controls announced on October 9th for 1 year. This comes on the heels of the Trump-Xi meeting where the two countries struck a deal on rare earths. Trump said the rare earths issue has been settled and there would be no more roadblocks on them. Speaking about Air Force One, the US president said it was a 1-year agreement that would be extended. He also said he would be going to China in the month of April and that Xi would come to the US at some stage after that. This meeting marks the first face-to-face meeting in 6 years, seeking a truce to end a trade war that has roiled the world economy. Another outcome from the meeting is that China is going to be working with the US to properly resolve issues related to TikTok. Now, both the US and China have also agreed to expand agricultural trade and have further affirmed the results of the Madrid trade consultations, with the US making positive commitments in areas such as investment. A spokesperson for the Chinese ministry said that the results of the trade consultations were hard-won, and China looks forward to working with the US to ensure their implementation, injecting more certainty and stability into China-US trade cooperation and the world economy. And in a major policy shift, the United States has ended automatic renewals of work permits for migrants, a move set to significantly impact Indian professionals holding the H-1B visa and awaiting green cards. The Department of Homeland Security announced the change today, effective for all employment authorization document, or also called renewal documents filed on or after October 30th, 2025. Under the previous Biden administration rules, eligible immigrants could continue working for up to 540 days after expiry if their renewal was filed on time. That's now over, though, with the Trump administration citing the need for stricter vetting and background checks to combat fraud and bolster national security. US CIS Director Joseph Edlow called it a common sense step, adding that working in America is a privilege, not a right. And in a major twist in the Louvre jewelry heist, French police have arrested 5 more people, including the prime suspect believed to have masterminded the daring theft from the iconic museum. Authorities say the new arrests come after weeks of surveillance and forensic leads. The stolen jewelry, reportedly worth millions of euros, remains untraced for now, but investigators say they're closing in. The Louvre, meanwhile, continues to tighten security as the probe widens across Europe. Tragic scenes unfolding in the Caribbean. Hurricane Melissa has left behind total devastation, with dozens confirmed dead and thousands displaced. Entire towns have been flattened, power grids knocked out, and rescue operations are underway amid flooded streets and debris. Authorities are calling it one of the worst storms in recent years as emergency teams race against time to find survivors and deliver aid to those left stranded. The severe cyclonic storm Montha has caused widespread devastation across Telangana, with continuous heavy to very heavy rainfall. Continuous heavy rainfall overnight caused the Himmat Sagar and Osman Sagar twin reservoirs to reach near full tank capacity. The authorities from the Hyderabad Metropolitan Water Supply and Sewerage Board have opened multiple floodgates at both reservoirs to manage the massive inflows. A blanket of haze and fog enveloped Delhi on Thursday morning, trapping pollutants and pushing the city's air quality into the very poor category after remaining poor for the past few days. According to the Central Pollution Control Board, the national capital recorded an air quality index of 357 compared to 279 a day earlier. The IMD said Delhi NCR is experiencing multiple weather influences. According to reports citing experts, the cyclone Montha has made landfall in Andhra Pradesh, while a western disturbance is active over the northern hills. India flexed its military muscles on Thursday with the start of Trishul, a 12-day tri-service military exercise on the Pakistan border and its first war games since Operation Sindoor 6 months ago. Trishul will involve special forces commandos, missile batteries, warships, battle tanks and attack aircraft. It also includes the Rafale and Sukhoi Su-30 carrying out simulated offensive strikes into southern Pakistan to test the Indian armed forces' readiness in a post-Sindoor scenario. Brazilian giants Flamengo are through to the 2025 Copa. The Rio-based club powered fast racing in a thrilling semi-final clash, showcasing their trademark attacking flair. The win sends Flamengo into yet another continental final as fans erupt in celebration across Brazil, dreaming of lifting South America's most coveted club trophy once again. In the high-profile defamation case filed by IRS officer Sameer Wankhede against the makers of Netflix's Bads of Bollywood, the court has now posted the matter for final hearing on November 10th. Wankhede has alleged that the series directed by Arun Khan tarnishes his reputation by portraying him in a defamatory manner in connection with the 2021 drugs on cruise investigation. A single bench of justice had earlier issued summons to Aryan Khan, Red Chillies Entertainment and Netflix while directing the removal of the objectionable scenes from the platform. All parties have now been directed to file their written submissions before the next date. The case continues to draw sharp attention with legal and public scrutiny on artistic freedom versus reputational harm. And Diana Pandole, the Pune-based racer, is set to make history as the first Indian woman to race in a Ferrari in an international championship. The 32-year-old will be driving a Ferrari 296 Challenge car at the Ferrari Club Challenge Middle East. The championship is set to commence from November 2025 and will continue till April 2026. And that's a wrap on Market Express. But viewers, stay tuned to NDTV Profit as there is a lot more action right ahead waiting for you on the other side of this break.
Let's call upon stage the man himself, chairman of the Raymond Group, Mr. Gautam Singhania.
What is different about the opportunity that India presents right now in this decade versus what you may have seen over the last 20-25 years?
I think it's the emergence of the middle class. There's an aspiration. Every middle class individual has an aspiration to want more. The Indian consumer has a lot of trust and belief in Raymond.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want
Nifty closes lower to end below 26,000 mark to trail the broader market. Most sectoral indices finish lower. Mid and small cap indices end flat with a mild negative bias. Trump cuts tariffs on China by 10% to 47% after high-stakes meeting with Xi Jinping lowers fentanyl-linked duties to 10%, says the US will soon sign a trade deal with China. China agrees to hold off on rare earth export restrictions for 1 year. The Chinese Commerce Ministry says China is willing to work with the US to jointly safeguard and implement the important consensus reached at the meeting between the two heads of state. Government may relax the proposed AI labeling rule and bring down the disclosure requirement to around 5 to 7% from the 10%. Sources say the industry warned blanket labeling could disrupt creative post-production workflows. Alphabet's Q3 earnings beat estimates driven by strong cloud and AI growth. Cognizant raises growth guidance for CY25 to 6 to 6.3% from 3.5% to 3.8% organically. US ends automatic renewal of permits for migrants. Move expected to particularly impact dependents of H-1B or L-1 visa holders. Large number of Indians expected to be hit. Delhi's air quality nears severe mark as haze, smog blanket the capital city. AQI reading rises to 375, bringing it to the red zone. AQI in several areas crosses 400. Hello and welcome. A very good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour of this show, we'll bring you the latest on markets as well as national and international news. Like every day, let's check how the markets fared today first. Benchmark indices ended a choppy session in the red. The Sensex slipped nearly 600 points, while the Nifty struggled to settle below the 24,900 mark. HDFC Bank, Reliance Industries and Bharti Airtel were the biggest drags on the Nifty index. Most sectors closed in the red, with finance, banking and consumption stocks leading the declines. Energy and realty counters showed some resilience, ending the day with a touch of green.
Right, so overall, if we take a look at the benchmark indices, the Nifty 50 as well as the Bank Nifty have underperformed the broader markets. The Nifty 50 ending at around 0.6% lower, below the 26, much below in fact the 26,000 levels, below the 25,900 levels as well. Coal India has been the top Nifty gainer, but Dr. Reddy's and Cipla amongst the top losers on the Nifty 50 today. The Midcap and the small cap indices almost end flat with a mild negative bias. Nifty Energy outperforms and largely led by Adani Green. The Nifty Financials under pressure, dragged by LIC Housing Finance on the back of its Q2 numbers and SBI cards as well, because of for LIC Housing Finance because of loan growth not being as per what the street was expected. And Nifty PSU Bank snaps a 3-day losing streak. Bank of Maharashtra overall has been the top loser on the Nifty PSU Bank as well. The Nifty Auto also falls for third consecutive day, dragged by Bajaj Auto as well as MRF. Nifty Metal also snaps its 6-day gaining streak. Jindal Stainless and SAIL remain the top losers on the Nifty Metal. So this is the overall view as to how the markets have done in trade today.
Thank you for explaining the market action today for us, Mahima. Sharks aren't just hunting for startups anymore. They are swimming straight into the Dalal Street. From Pharma to Boat, the Shark Tank stars are making waves with their market debuts. Let's dive into how these shark stocks are performing post-listing. Sharad is here with all the details.
Sharks are moving away from tanks to a sea called Dalal Street. The sharks have arrived at Dalal Street. But how is Dalal Street treating the sharks? Let's go one by one. IPO size, all the sharks are under my lens. Of course, these sharks have been active from 2021 itself. Namita Thapar, their IPO size of Pharma, that was roughly 1950 odd crore rupees. There was fresh issue aspect as well as OFS aspect. Eternal 2021, the IPO had come. Over here also we see it was a 9,375 odd crore IPO size. Honasa Consumer Ghazal Alag 1,700 crore IPO size. Of course, it had both the components of fresh issue as well as open fair OFS. And Piyush Bansal recently almost 73 odd 100 crore rupees IPO size coming in, and this IPO pricing also is about the street is actually chattering about. But recently even Aman Gupta's Boat has filed a smaller size IPO, but a 1,500 crore IPO size coming in from Boat as well, which is called Imagined Marketing. Listing price and current price, let's see how the performance has happened over the year. Honasa is still trailing. That's the main important part. Not much data for Pharma, but nevertheless it's flattish here. But the one who takes the cake, that's of course 54% return coming in from the listing price as well when it comes to Eternal. But Honasa Consumer, there is a change in business model, and because of that the numbers have been on the lower side. That's coming at 15%, and two sharks are waiting, and these numbers will be coming in the months to come. Also, let's look at how the offer price was and what the current price is. That's also very important. And you see the pricing from the IPO, that is also in a main contention when we look at these new big large startups who come to the bourses. Pharma, not much, just 38% gains coming in. But the leader of the show by far is Dipinder Goyal's Eternal. Look at the returns. That's 363% of returns coming in. But there is a trail, and Ghazal Alag's company Honasa, that's coming in at 9%. That's the parent company for our viewers to understand. And of course, Dalal Street will be looking at these two sharks as well as and when their companies comes and their numbers come in. But let's look at the timeline, what actually stands out. Namita, she came in to 2024, her company. Dipinder's is the oldest in the class of 2021 of startups. It came in at July 23rd, 2021. And Honasa also in 2023. And recently, it's November 2025, we are seeing Lenskart from Piyush Bansal. But nevertheless, we can expect in the next 1 to 2 odd months what the street is expecting for Boat also for Aman Gupta. So we can see at least 5 sharks have already made their debut, in the Dalal Street. 2 of them IPO will be coming, and maybe a couple of more on the offing.
After that interesting report, let's take a look at a major international story today. US President Donald Trump and Chinese President Xi Jinping held their much-awaited meeting on the sidelines of the APEC summit in South Korea's Busan. Both leaders called the talks warm and constructive, marking a rare thaw after years of tension. While President Trump described it as an amazing meeting, rating it a 12 out of 10, Xi Jinping said both sides had reached consensus on key issues. The two countries announced a series of headline decisions. The US has agreed to cut tariffs on Chinese imports from nearly 57% to around 47%. China has announced that it will suspend the export controls on rare earth minerals for 1 year. The Chinese Commerce Ministry said that the country is willing to work with the US to jointly safeguard and implement the important consensus reached at the meeting between the two heads of states. Let's now go across to my colleague Jasmeet Singhai for a detailed report on the key announcements made after this crucial meeting. Jasmeet, please wrap this up for us.
Well, right, thank you for that. The long halting trade talk finally comes to an end. While if you look at the overall picture, the 10% rate cut from 57 to 47 is a positive move done by US on China. Secondly, we also make a note that given the Trump also announces that they will be negotiating and coming down to a new tariff rate soon. Now, in terms of this tariff rate, the discussion was done across various horizons, starting off from AI, where China to invest in US for the AI development, while China to also increase the corporation in terms of Fentanyl control going forward. While we also see the soybean news coming up, where China has ordered the soybean from US post the meeting which it had with the Trump. Well, we also make a note that the China to ease the rare earth export, which has been the major concern of talks all this while, China to ease the rare earth control over the open market further. While we also make a note that US-China signs a one-year deal with regards to the same rare earth matters. While we also see that going forward, they would like to work on even the national issues, the Ukraine issue, and get solutions for that. Lastly, what the major picture depicts by the discussion is that both sides called this talk to be constructive, and we look forward to see further talks and get the proper understanding where will the trade talks finally settle in going forward.
Right, Jasmeet, thank you so much for those key points from this crucial meeting between the two super houses. But moving on, Standard Chartered's Chief Investment Officer Manpreet Gill says the latest Fed's outcome is proving constructive for US-China trade relations. He notes that given the high degree of economic interdependence between the two economies, it remains in the interest of both sides to reach a deal. Listen in.
I think based on just the interview we all heard and what I read earlier this morning, it does look like the outcome is a constructive one when it comes to US-China trade. But to some degree, that's no surprise, right? I think we had the buildings of this going into the physical meeting. And to some degree, what a lot of us learned sort of ahead of this, the most recent bout of trade tensions is, the high degree of codependence on several fronts. So it is the interest of both sides to reach a deal, and I think that's really what we're seeing to some degree, come to conclusion.
It was an earnings-heavy day for big tech with AI taking center stage. Meta, Alphabet, and Cognizant delivered strong Q3 results led by AI-driven growth. Meta's revenue rose 26% on a year-on-year basis to $51.2 billion, while Alphabet's hit $87.5 billion with robust cloud and AI momentum. Cognizant reported a 7.3% YOY revenue growth and raised FY25 guidance, signaling steady IT demand. Across tech majors, heavy AI investments continue despite rising costs, underscoring confidence in long-term returns. My colleague Jasmeet joins us back with more details on each of these companies. Jasmeet, how does the picture look like for each of these earnings?
Well, as rightly said, it has been an AI-heavy based picture given what the Q3 earnings indicate. Starting off with the first one, which is Meta. While the Meta gives a big push on AI, we see the revenue rose by 26%. On the other hand, the advertisement business, which nearly reports a 98% of the core of the business, saw a strong uptick. But the street still stands divided, given the heavy announcement made by the company in the AI. On the other hand, the AI arm of the company, which is the Reality Labs, saw a net loss of $400 billion. So this keeps the street divided between investment in AI and the loss reported on the back of AI. But we also make a note that there has been overall picture where even the CEO Mark Zuckerberg also comes in the picture and says long-term efficiency will be boosted on the back of AI. Going more to the next one, which is Alphabet Q3 earnings, we see that the revenue rose by 87.5 billion, while we also see that it beats the estimate. In terms of earning per share, it stands at 2.87 versus the estimate was at $2.63 per share. Now, in terms of the cloud services, the Google Cloud revenue surged by 33% on YY basis. When you look at the AI angle for this particular company, we make a note that AI-powered products revenue jumped by 200 times on YOY. So we have some firms where the revenue is still negative on the back of AI, but some firms like Google and Alphabet, we see the AI revenue jumping almost 200 times on YOY basis. In terms of the expenditure, company has raised the capital expenditure guidance from $91 to $93 billion for FY25. While lastly is Cognizant, which is generally an IT indicator where we take the readings of Cognizant result and see how it's going to impact the overall Indian IT space as well. Now, in terms of this particular company result, we make a note that the revenue is up nearly 7.3%, while we also make a note that the overall profit fell 53% because of one of the costs. Now, in terms of the guidance, which is a very key important aspect for the IT, has been raised for the entire year of CY FY25. Now, in terms of margin guidance, have also been raised to the upper end, that's 15.5 to 15.7 going forward. Now, this result implies a stable demand in the market, and we also make a note that BFSI segment sees stability going forward from here. While this also shows that Gen AI is being a tailwind instead of the headwind that was expected by the industry. So all in all, a huge investment in AI space, at the same time, mixed set of numbers for all the tech giants out there.
Right, Jasmeet. Huge investment in AI space, but a mixed set of numbers at the same time. Thank you so much for that wrap up. But big news for Indians working in America viewers. From today, October 30th, the US is ending automatic work permit renewals. Now, this means no more 180-day extensions while your EAD, which is Employment Authorization Document, is being processed. This hits H-1B visa holders and their families the hardest. And as per statistics, Indians received 71% of all H-1B approvals in 2024. That's nearly 3 out of every 4 skilled worker visas. When you add China, that number rises to 89%. But here's the catch. The USCIS, which is United States Citizenship Services, often takes 3 to 6 months or even longer to approve renewals. And without the auto extension, a single delay means you can't legally work in America. That potentially could result in unpaid leave, job loss, or even being forced to leave the country. For families, it's worse. Spouses on H-4 visas get affected, kids' schooling gets disrupted, and health insurance can vanish. The US Department of Homeland Security says this move is about stronger security and stopping fraud. And listen close to their words. They say working in the US is a privilege, not a right. Now, while this new rule will not impact permits already extended before October 30th, for the request planned tomorrow onwards, which is after October 30th, USCIS advises to file your renewal up to 180 days early, not just 90, that won't be enough. And use the premium processing route if you can. Basically pay extra fees for the same purpose if possible. And moving on, as investing platform Groww becomes a household name and gears up for their mega IPO, we sat down with the founders in this exclusive interview ahead of their highly anticipated D-Street debut. Coming straight from the Flipkart playbook, they share their journey of democratizing investing for millions. Get ready to hear why their customer-first focus and search for perfect product market fit is what sets them apart in the highly competitive space. Listen in.
Let's just start with the origin story. 2016 is when both of you got together and did Groww, but you've worked together before. At that point, met each other at Flipkart. Where did the whole idea come from?
Yeah, so we know each other since like 2005, right? Our first jobs together. And then at Flipkart, when he joined, so I joined earlier, and then after a year he joined. We started brainstorming. By the way, we have two other crazy folks with us who are not here right now, but they got added to the team later. But when we started, the idea was 4 of us. You know, we worked at Flipkart and we saw how e-commerce kind of disrupted overall commerce in the country, right? And passionate, like we were very passionate about financial services, especially investing. I started investing when I was studying here at Bombay, at IIT Bombay, and I started around 2001 or something. And I still kind of remember like how tough it was to open an account and start investing. And guess what, in 2016 it was similar. And when 4 of us started brainstorming, we thought, you know, can we democratize this process of investing? Can we build like a platform, like how Amazon or Flipkart happened in e-commerce? Can we do something similar in investing space and wealth? Can people come? Can we make it very simple, delightful, transparent, and let people build their wealth?
No, so just hang on a minute. This is interesting. So you've taken the experience of selling phone, laptop, clothes, etc., XYZ, everything on Flipkart, and said, let me apply to financial instruments.
So I think a little differently, Tamanna. I think we've taken all the learnings of how consumer think, how consumer decide, what is important for the consumer, and use that learning into a different place, solving a different problem. So investing was a different problem. Buying a phone or a t-shirt or a shoes is a different problem. But humans are the same. So the thing that helped us and translated from our experiences of not just Flipkart, even before that, we have been part of a couple of startups. We did our own startups before.
Together or separately?
Separately.
Okay.
Both of us failed, not in
different ways.
In different ways.
Yeah, and that was also helpful, by the way, because now you are not from the financial industry. You are not from that. So you can think like a customer. So there's something called curse of knowledge, right? If you know everything about that, then you can't think about somebody who does not know anything. So when we think about Groww, we think it more like a consumer problem than like a financial problem. Of course, there are financial products, but you need to know how customer is thinking about that product.
And India's proposed AI labeling rules may be headed for a revision. Sources tell us the government is weighing minor relaxations to its draft mandate, which could reshape how platforms like Meta, Google, and X handle AI-generated content. My colleague Rishabh Bhatnagar is here with the key details on the same story.
Right, a very interesting development, what we're seeing coming in from the Ministry of Electronics and IT on the AI labeling mandate that they very recently put out. There has been somewhat of some concerns that have come in from the industry with regards to this being a blanket mandate that has been put upon large platforms like the likes of OpenAI, Meta, Google. All of them will have to comply with this, including the likes of AI platforms such as OpenAI or Google's Gemini or Sora or X's Groww. All of these stand affected. And what we're picking up on this is the fact that despite these concerns, the government may not fully roll back the 10% AI labeling mandate, but what it might do is it might soften this burden that's put on companies. It might pull down the mandate from 10% of the audio or video screen length or size from to about 5 to 7%. That is something that we're picking up. Remember, the government is not keen on rolling back on any of this, given the fact that they have cited deepfake as a major threat. There's been various instances of videos coming out of senior leaders also in deepfakes, and that has caused a lot of concerns. What we're also seeing is that public consultation for this is open till November 6th. And we will hear from the government officially on what they plan to do with the consultations that they've received.
The Ministry of External Affairs has confirmed that India has been granted 6-month exemption from US sanctions on Chabhar port, a key route for India, a trade route towards Afghanistan and even Central Asia. This announcement comes from MEA spokesperson Randhir Jaiswal amid trade negotiations between India and the US. Listen in.
I can confirm that we have been granted exemption for a 6-month period on the sanctions that were applicable, American sanctions that were applicable on Chabhar.
The Finance Ministry is ramping up preparations for the 2026 budget with early consultations. NDTV Profit reported yesterday that Revenue Secretary Arvind Srivastava has kicked off meetings with key industry bodies like FICCI and PHT Chamber of Commerce and Industry, signaling a broader push for stakeholder voices in shaping policies. The goal is to spot sector-specific gaps, especially in taxation. Let's listen in to some of the key suggestions made by 3 key voices at PHT CCI, beginning with CEO and Secretary General Ranjit Mehta, Chair Direct Committee Mukul Bagla, and former President Saket Dalmia.
Especially for the MSMEs, I would say that, Section 54B, where any person who sells his property and gets if he invests the property, the receipts to buy another house, they get a capital gain tax advantage. We have recommended that even the MSME, if he sells any of his factory and if he buys another factory with that money, we have requested the government if that benefit of capital gain tax can be given to the MSME, that will promote the MSMEs and all that will also give them extra liquidity in their hands. And mainly our focus was definitely on giving more liquidity and ease of doing business for the industry. And then, of course, we have talked about interest equalization scheme, which can be reintroduced, and also the tax audit for MSMEs can be simplified.
We feel that India could come up as a big manufacturing hub. So for that, we have requested the Finance Ministry to reintroduce Section 115 BAB, which was a new tax rate of 15% for new manufacturing units. So we have suggested that that section should be reintroduced, and new manufacturing units should be given a lower tax rate, which will help in setting up of new manufacturing units, giving a growth to the country, creating employment, and overall increase in tax collections.
Increase the tax slabs so that the middle income economy is able to spend more into the economy. The second point was, we are all talking about self-reliancy, and after US tariffs, everybody is talking about that we should be self-sufficient. So make in India for the world. We requested that the income tax exemption for new investment in industry should be reintroduced at 15% slab. I think that's very important. And secondly, that the most important other part is that we are seeing that the whole world is moving towards intellectual property, and for that we need more spending of R&D to the economy. So tax exemptions for the same should be brought back so that we move up the value chain.
Well, viewers, that's all the time we had on this edition of Profit 360. But do stay tuned to the channel as we continue to give you a lot more news and updates.
Let's call upon stage the man himself, chairman of the Raymond Group, Mr. Gautam Singhania.
What is different about the opportunity that India presents right now in this decade versus what you may have seen over the last 20-25 years?
I think it's the emergence of the middle class. There's an aspiration. Every middle class individual has an aspiration to want more. The Indian consumer has a lot of trust and belief in Raymond.
The NDTV Profit has come a long way. You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think
Hello and welcome to KYC. I am Sharad Dubey and with me is Varsha Chandnani and you are watching NDTV Profit. Our special segment KYC is there and the company on the radar today is Sagility. Of course, on back of earnings, it's buzzing in the street as well. Brokerages are upgrading and interestingly, numbers have been on the stronger side. But the key questions in our segment we are going to be asking about the companies is what would be the margins triggers, going ahead. The street wants to know. Of course, the earnings is very important. But apart from that, there are other things also which we should be watching out for. The second question would be what led to the guidance? Of course, Varsha was hearing the con call as well, and there was a revenue and EBITDA guidance upgrade also. Outlook coming in on the broad path, the acquisition was there, and where the cash deployment would be. It's a product-based companies, whether this will be an AI acquisition or another inorganic acquisitions, that is something which we will be watching out for. Also the debt reduction plans, of course, from IPO itself, debt reduction has been there, but will that be complete by FY27? That's the street question which we are looking out for. The outlook on the US healthcare system, what are the important benefits or the impacts which could see, and the demand trends in client additions. A lot of moving factors going ahead for this company, Varsha, but what's the entire detail about the company itself? Where does the company actually stand?
Well, thank you for that, Sharad. Let me explain in a very easy way what does this company do. So basically, this company takes over complex or non-medical tasks that are essential to healthcare but are very, costly for US companies to handle. So, for example, for payers, that is health insurance. So there are two clients for Sagility. One is health insurance companies, and the other one is, hospitals and doctors and clinics. So for payers, that is health insurance companies, what Sagility does is they handle the claim process, then ensuring that claims are validated and paid accurately. They also provide data management services in onboarding and verifying their health providers in payer network. For hospitals, what they do is they manage end-to-end management of financial operations from pre-service insurance verification to post-service billing. So basically, all the back working is been done by Sagility Healthcare, and that's the product-based company that Sharad was talking about. So it's nothing but the non-medical task that doctors, clinics, all health insurance companies that couldn't do is hand over to Sagility, and that's the basic business model of this company.
Well, that's a very interesting and a very simplified way. Thank you very much, Varsha, for that. But our viewers are waiting for what are the key parameters that will be judging them, this company on the KYC itself. Let's just go through the parameters and then we will go into the income statement first. Of course, balance sheet, cash flow, return ratio, shareholding, street cred, and valuation and outlook. These are the 8 parameters where we will be judging the company in our show KYC. First of all, income statement. That's something to look at. Numbers are pretty good. Varsha has also picked up some numbers over here, and if you see the overall data itself, it's not very big because it was recently listed last year itself, but overall the growth numbers, the revenue jump, that's been significant. EBITDA margins, they have maintained. EBIT margins, you could say flattish, but on the higher side at 26% odd. But look at the PAT numbers, that's what the street actually likes. 590 crores in FY24, FY25 it was 810 crore rupees. And the main reason for the stocks buzzing in today's trade as well is the Q2 performances. The performances came overnight. There was a 25% year-on-year growth coming in. Revenue, EBITDA also, the story remains same. Slight dip in margin, but still at a healthy levels of 26%. But here as well, second time, net profit takes the cake. Almost 84% up on a year-on-year basis, and the margin trajectory itself that has been good, and we could say it's kind of stable at 26% plus. So from my side, the income statement, this would be a thumbs up. Nothing much to be concerned about regarding this income statement. I'm sure there's something in balance sheet. What you're looking at?
So, a very interesting case when it comes to Sagility's balance sheet, and one of the reason, why the net profit, there's been huge spike in net profit is because of lower interest costs. Because if you see their balance sheet, look at their balance sheet, their borrowings from FY24 from 1,934 crore has been reduced to 690 crore. And they want to go debt free by FY26. So overall, if you see, the highlighting factor in balance sheet is nothing but the reducing figure of borrowings, and that's the reason why we have given a thumbs up. Nothing much to be added when it comes to balance sheet, because this is the only thing why we have given a thumbs up. And when a company had come with an IPO, they had clearly mentioned that they want to cut down their debt, and the IPO proceeds are being used to cut down the debt. And by FY26, by end of FY26, you'll see this company may go to debt-free status, and that's where from FY25 to FY26 you will see a huge spike in net profit because of the reduced interest cost only. So thumbs up from my side when it comes to balance sheet.
Well, that's a very interesting point Varsha made. But cash flows, Varsha, looks kind of optically very strong. Operating cash flows have jumped up from 973 crores to almost 1214 odd crore rupees. PAT has also been a good number, and Varsha had stated earlier that this number might go up as well as the interest costs come down as company pays out its debt. Cash flow to PAT conversion, that has slight dip has come in if you compare that with FY24 itself. Net cash flows, there is no clear trend as such, but interestingly I would just like to point out that in this FY25 itself, there hasn't been much in the net cash flow segment. So net it's neutral. It's not very superlative as what we saw in the income statement or even the balance sheet, but from my side it's going to be a neutral rating going ahead.
Right, talking about the ratios, let's see what that number pans out to be. From in FY24, if you see, the ROC was around 47%, which has increased to 55%. Now this is on the back of the strong financials that the company has seen. So again, because of the good, rather increasing income statement, you're seeing this number go up, and one of the reasons why we have given a thumbs up when it comes to return ratios.
Well, that's pretty interesting. So till now, I think we did 4 parameters, and I think 3 of them they have done really well. What matters is numbers, what matters is earnings, and the company is showing. But let's look at some other numbers also. It's very important. And shareholding numbers we crunched, me and Varsha together, and over here, not much history because it's just been 14 odd months since the company has been listed. But look at the numbers. Promoters, of course, they did sell their stake, but FIs lapped up. They have doubled their exposure from 3%, now it's at 6 odd %. And interestingly, where the promoters did a sell, DIs lapped it up. Look at that, that's a double exposure going up. 7%, now that has gone up to 15%. We understand flows in the institutional part, but even the retail has not left behind in the race. They have also almost double, you could say, from 7% to almost 12% in the shareholding pattern, and this is just a change happening in just 6 months. So that you can see how important this important number is there, which is flashing on your screen. So from the shareholding pattern perspective, I would like to give a strong thumbs up as well for Sagility.
Talking about the street cred, there now, if you see, we have given a thumbs down because company has not given much returns to its investors. The year to date, if you see, the return has been mere 1%. The last 6 months, company has seen 21% of returns, and in last 1 month it's 19%. I'm not saying that this is a very bad number, but not exciting number to be said. So overall we have given a thumbs down, considering not an exciting returns that the company has given.
Well, that's true. When the returns are not exciting, what happens? The valuations turn a bit favorable. And that's what's happening in this stock as well. The price to earnings, the EPS numbers, there have been, slight jump coming in, but the P numbers, that's what I'm looking at. FY26, the numbers state at 31 times its price to earnings ratio. And for FY27, this comes in at 25 times. It's largely net in line with what the peers are having in the mid-cap product IT space. And a strong up moves is coming, at least in this space as well, because there is a hedge if you compare that with big service IT company players as well. From my side, it's a neutral rating. Nothing much to talk about, especially regarding the valuations. Let's give it more time, and then maybe we'll have some more information on that.
Yeah, on to the outlook, which is the last parameter when it comes to the KYC ratings. Overall, if you see the H2 and Q3 and Q4 for this company will be very good. So they are expecting this strong momentum to continue in H2 as well. Now, the important point, and maybe one of the reasons why the street is excited, because that's showing into the stock price, because they've increased their guidance, their revenue guidance to 21% revenue growth from 20% in last quarter what they've given, and they've also increased their adjusted EBITDA guidance to close to 25%. Debt to equity, debt will be fully repaid by FY27, and synergies is also expected when it comes to their broad path clients. So overall, Q3 and Q4, considering a strong quarters for the company, they're expecting this strong momentum to continue. And overall, the outlook, considering the deal wins, considering the broad path synergies to the business, considering the revenue increase in revenue guidance, we've given a thumbs up when it comes to outlook. So overall, the outlook, from an outlook perspective, it's a good one.
Yes, and we did have a problem while we were discussing that what are the negatives for this company, and of course most of the parameters actually stood out. And just to get in our viewers who are just tuning in now, the most important thing is let's just revise all the ratings which have happened in the KYC segment. 2 thumbs up coming in, income statement and balance sheet. Cash flows largely neutral. The information is also on a limited basis. Return ratios, Varsha had pointed out, they are on the positive side. Shareholding also, we have given a +1. Street cred, not much returns coming in for shareholders who are holding the stock, say after the listing. Valuations still on a neutral basis. And lastly, outlook. That is what the street is cheering, Varsha. That overall there is a strong momentum coming in. So from our side, 6 out of 10. That's on the higher side we generally give when we have a KYC rating, KYC right? Ratings. So I'm of course new to this show, but Varsha is quite helping me a lot in this segment. But there's another person who will help us a lot in this segment, and that's the management of the company. Joining us, we are having Sarvabhauman Doraiswamy Srinivasan. He's the Executive Vice President and the Group Chief Financial Officer at Sagility. Good afternoon, sir. So first question, of course, would be the street is asking, is the second quarter numbers, but more than that, it's the con call. In the con call, you had stated that there is an increase in the guidance for the revenue and EBITDA. There is a slight increase in both sides. What led to this? What are the factors that led to you increase the guidance going ahead?
Yeah, firstly, thanks for having me on the show. Like we said on the earnings call, the synergies that we worked with BroadPath, the improved operational performance. In the last few years, the company has been consistently investing on new gen technologies, and AI has helped us improve our profitability significantly by almost 100 plus bips in terms of the operational performance. What we do is core to our clients' operation. So it's not a discretionary spend, which means we are fairly in I wouldn't say a risky, but in a recession-proof sector where our revenues are stable. We are not a fast-moving company. We are a slow, steady, gradually moving up company. You can expect sustainable results. And from a margin perspective, the new wins that we have done gives us the confidence to have a better set of numbers going forward or in the near term. So in our business, H1 is fairly softer in the sense like though it has grown year on year healthily. What we see is the open enrollment season that comes up, and with the acquisition of BroadPath, Q3, we expect a lot of work on the open enrollment season. So Q3 is likely to be significantly a good quarter compared to Q2.
Understood. Hi, Mr. Srinivasan. This is Varsha this side. You were expecting some dilution in EBITDA margins because of the BroadPath's integration, considering BroadPath being on the lower margin profile, but still increase in margin.
Good evening, viewers. This is Malika Mishra, and we are here to decode